This is Romulus with Backpack Trader. Do you like roller coasters? We don't have them in ancient Rome. Boy, I took a ride on one recently. It is absolutely incredible. If you've never done it before, this old Roman highly recommends it. The stock market has been on a roller coaster ride lately. Look at all these loops and flips and ups and downs. Here I have the main stock market index. This is the most important stock market index that you should be looking at, analyzing, thinking about, and watching every single day. It is the S&P 500, the largest 500 companies on the American exchanges. And for the most part, they are among the largest companies in the world. Companies like Apple Computer, for example. Oh, there you go, up a little bit. And also JP Morgan. Ooh, they did it again. They missed their earnings. We will come back to that, everybody. We will come back to that. But let's keep looking at the roller coaster. Okay, quickly. What is going on this ride? There's an all-time high right at the beginning of the year. After running hard and fast, giving different intermittent pauses, which on roller coasters you have sometimes before the loop-de-loop. But new all-time high right up there, running hard, more or less from late March of 2020, right after the COVID crash. This is the new all-time high as of at least now. And as a matter of fact, the stock market has gone a little over 3 months without seeing a new all-time high. That is the longest that it's been since the COVID crash and then recovery in the spring and early summer of 2020. That is significant, by the way, what I just said. Significant. Okay, new all-time high here, and then a new low over here. Bit of a recovery. This recovery point doesn't have the roller coaster momentum, even though it was a pretty sharp swing, to get back above these highs. So that is called a lower high. Then it slips again, and there we go, going through the loops. That's a lower low. Now we put in another lower low, and now we loop right back up. The fun is only getting started, isn't it? We love this amusement park. This is a little bit of a higher point than these two clips right here. Let's even take a look at the candles. You can see that it did eclipse that point on an intraday and a closing basis, but it wasn't enough. The market gave it up right away, then swinging right back down in the roller coaster. Like I said, this is nonstop fun. A lot of traders and investors around the world are asking, how could the market have sold off so aggressively the last couple of weeks after moving up so strongly from those middle of March lows? It's the roller coaster, everybody. We're in the middle of it right now. And you have got to get comfortable with that if you're going to improve your trading and investing skills and abilities and putting more money into your bottom line on a regular basis. And it's consistency. That's the king of all trading abilities, being consistent. Okay, so what comes next after this little downdraft that we've seen? There is a bit of an uptick today, but what has been going on and the reason that this market wasn't able to hold it together, follow through after breaking these little mini points over here, that little mini high over here. Again, it did follow through and break up, but it wasn't able to really follow through and challenge these highs in early January. Why wasn't that the case? There's one simple answer. There are others, but there's one simple answer that does the trick here. There's no volume in here, okay? You have to ignore that day. That's a triple witching situation. There's no volume. As the market's going higher and higher, there's no gas in the tank. Look, things can fall down from gravity. That's a law of physics. But in order to go up, you need some kind of energy in there, some type of a catalyst and explosion. It could be fuel in the tank. It could be gunpowder behind the bullet, but some type of energy needs to get involved in order to move something higher. That's not the case. And that set up the stage for what we've seen the last couple of weeks, this pullback in here. Earnings are going to continue to come out over the next 2 to 3 weeks. JP Morgan, as we've been talking about, this was the big one. And, they just couldn't get it together, could they? Let's find out what they said. They missed their earnings estimate by 9 cents, about flat on the revenue estimate right there. And that just wasn't enough to impress the traders and investors around the world and keep that stock, well, at least return it to some type of an upward momentum trajectory. Not enough. Now it's setting a new multi-month low as of today. And how far back does that low go? Come with me, shall you? Let's journey a bit. I mean, I'm traveling all the time, back and forth from old Rome. That's why they call me Romulus. All right, we're going back. We're going back. And it looks like the stock is trading today at the lowest point. You got over a year. You got a new 52-week low for sure, because once it broke the lows over here in early March, that's a new 52-week low on JP Morgan. Now, I'm pretty glad about that. Why? Because a couple of days ago, I shorted this group of stocks, the bank, NASDAQ bank stocks, and I'm up, closing out on a 5% gain on that one. And that's just since Monday. Your old buddy Romulus knows a couple of trading tricks. Got him up his toga sleeve, as a matter of fact. Okay, let's keep perusing here. Energy stocks continue to do well. Let me expand that back. Okay, but don't trust it again. The volume isn't there anymore. It was over here, but now it's not around anymore. Okay, so it does look like a bit of an ascending triangle. The 21-day moving average, which is that light blue line, that's just an average of the previous 21 days of closing prices, is serving as a bit of support for XLE. There's a bit of resistance right here, as you can see. Let me draw the purple line in. That's what I love to do. Okay, there's a purple line right here. It's kind of above there right now, but there's no volume to back it up the move. Again, you need volume to push things higher. You need some type of an energy catalyst to get that going. In addition, oil prices looks to me like they're breaking down from a descending triangle, just retesting it right about now. We should see mid-80s on oil sometime between now and the end of June. Speaking of sometime in the future, your old buddy Romulus is still of the analytical opinion that all major indexes will at the very least test their late February and early March lows, at the very least test them, and there is growing probability that there might be a break below them, but at the very least testing them. So what does that mean? No hurry to buy stocks. You must already have killed that FOMO emotion within you that was so hard to deal with in 2020 and for a good part of 2021. But I hope, and it is my also prayer, that you have crushed that trading demon, just crushed it beneath your heel, because there's no reason to have it right now. None whatsoever. Stay patient, stay careful. Hey, look, go out and do something else. All right, have a little fun out there. Me, I'm heading back to the Coliseum. There's an action-packed circus going on. We've got races, we've got gladiator fights, we've got political discussions in the forum, and then we're going to go out and do what Romans do. All right, old buddy Romulus, that's me. I've been doing this for over 27 years. I started my career at 67 Wall Street, which, by the way, is no longer a place of business. It's a condo. There are no more banks, brokers, advisors on Wall Street anymore. They've all moved to different parts of the world. But me, I started on Wall Street, 67 Wall Street to be exact, over 27 years ago. And I'm thrilled to have the opportunity to continue to bring you what is hopefully decent and helpful trading and investing information. All right, like I said, I'm jumping off the roller coaster. I'm going back to ancient Rome. That's my destination, and I'll see you tomorrow. That's all for now.